Preparing for the market open can be a little confusing when you're first starting out as a trader. I'm going to be talking about the 5 things, the most important things to do in order to prepare for the market open. So let's get right into it. I'm Pat Mitchell. I've been a day trader for over a decade. I teach people how to trade as well. I've been doing that for 7 years very successfully. And I want to give you guys some free information and knowledge. So let's get right into the 5 things that you should do to prepare for the market open. Starting off to prepare for the market open doesn't just start before the market open on that day. I always start the night before, the evening before, a couple hours after, or at least 1 hour after the futures markets open up, which is the ES futures. Now, I watch that because it's going to give me an idea whether the market is going to gap up or gap down the following morning. Now, that's not always going to happen. We can have a huge gap up in the futures markets and then end up in the morning with a gap down. So why would I prepare? Well, I see a lot of people saying that making nightly scans or a nightly watch list is a waste of time. And it isn't, because it's about getting your mind set up, already preparing for success for the following day. It's important because preparation is key as a day trader, and it's something that is always greatly overlooked. Now, we may have to amend our trade plans the following morning, but we can start by setting a few levels. We want to know what areas are interesting as traders, as day traders, for the following day. Like, do we have moving averages around? Do we have really crucial technical support or resistance in that area? Whether it does gap up or gap down, it kind of becomes irrelevant because we are always prepared. We see that there are levels in our sights and we know, okay, that 9 EMA, or it's coming into the 200 SMA on the daily. Remember, we look at the daily chart when we are setting up our watch list. Those daily chart levels are the most important thing. So number 1, I always start the night before and I make a nightly watch list. Number 2, be early. So now we're talking day of. Pre-market is open. We want to start looking at it. I've seen way too many traders come into the markets at like 9:20 a.m., 9:29 a.m., and think that they're going to be able to have a grasp on the market. That's not going to happen. What's going to happen is you're going to be ill prepared and you are going to make mistakes. You're going to miss things. I always fire up my computer nice and early, get my charts up, and start looking things over. Now, again, you might need to tweak some things, but it's just about looking. It's about getting a grasp on the market. Did we actually gap up? Did we gap down? What did we do? This is all important. So arriving early is number 2, and it's a crucial step. Number 3, now before we start making adjustments from our nightly watch list, those scans that we did the night before, we already have a few levels up there. Before we do that, we want to take a broader view of the markets. So what I mean by that is we want to make sure that Qs, QQQ, and SPY, SPY, are up on our charts and we are looking at it. Those are the 2 markets. We have the S&P 500, which takes care of about 503 different stocks all in one. So it's giving you a really nice basket. It's an ETF or ETN, and it's going to give you an idea of what the general market is going to do. Now, I trade tech stocks. I trade proper tech stocks. That's why I also want to include Qs. In that basket, there's like 101, 102 different stocks in that basket, in that ETF. And what that's going to tell you is, again, now you're narrowing down your market view, okay? So if you trade tech stocks, that's what you want to be looking at. Let's say you trade small caps, not penny stocks, but small caps. Look at IWM. That's going to give you an idea of what the majority of them are doing on average, whether it's gapping up, gapping down, opening up flat, whatever it's going to do. You want to look at the markets of what you are trading. So again, tech stocks, I watch the cues because that's going to give me an idea of what Apple, AMD, Meta, X, all of the big ones are going to be doing. Nvidia, Microsoft, Intel, I could go on. So that is extremely important. Number 4, make sure when you are developing your trade plans that you have a trade plan for both long and short. You don't want to be limiting yourself. Too many times when I first started out, because I was uncomfortable going long or uncomfortable going short, I didn't prepare the other end of that. I would just look for a long or just look for a short. Now, the reason why I would do that, or a secondary reason why I would do that, is because I had a bias. I had a bias because the market gapped up a little bit and it came into, or it gapped up just above a crucial level where it's like, okay, I'm just going to wait for that previous close test. It's going to come down into that level. I'm going to take that trade. But what happens if it starts ripping straight up? Well, you miss your entry. Now what are you going to do? Well, you need to have a trade plan for that as well. And that's why I always recommend having both sides of the trade covered, both a long and a short. And not only that, but when you start getting better at this, you really want to start looking at things like what happens if those trades fail. Remember, we make trade plans. It doesn't mean that those trade plans need to work. The market doesn't need to do anything. It can do whatever the hell it wants. Just because you have a valid trade plan, it doesn't mean that it needs to work. It won't work 100% of the time. You'll have these people out there saying that, oh, my trade plans always work. They don't. Now, a variation of your trade plan can, and that's what we do. That's what I do. I always have a backup plan. So instead of just getting 2 trade plans ready, I'll essentially have 4 trade plans ready, or pretty much 4 per stock that I'm watching. I know it sounds like a lot, but it isn't. It's very basic stuff. So always have a trade plan for both long and short, and one for if that long fails, and one for if that short fails. Important stuff, guys. Number 5. Now, this one is extremely important. And this is probably the biggest mistake that traders make out of that list. What people are doing is during the pre-market, they're looking at news, they're looking at social media. What that's doing now is getting into your head and it's forming a bias. Let's say you're watching Apple, for example, and you've already developed your trade plans. You already have a good plan of attack going. You have a long, a short, so you have 2 trade plans. Plus, if that long fails, you have a way out of that situation and a potential reset trade. And then same with the short. So you have 4 trade plans all ready to go per stock, right? No matter what the market does, you are prepared for it. So do not fill your head with extra noise, because what you're going to do is, let's say they wrote there's some news release or press release out there, or just a general news article on Apple that morning. Let's say it's negative. It's negative news for whatever reason. Oh, they didn't hit the greatest numbers the other week on sales, or whatever it is. It doesn't matter, right? That's going to get into your head. And then you are going to hesitate taking that long if it triggers. Do you see what I'm getting at? Do you see how that could become a problem? Don't be doing that. You want to stick to your trade plans. You've already prepared yourself extremely well. Now, some of you will argue the point that, oh, news can help you. It can, but news isn't released in real time, guys. So what a lot of people don't understand, you need access to a Bloomberg terminal in order to get that. Now, the day and age that we live in now, news does become a lot quicker, okay? It's not like the old days where there was a 15 to 20 minute delay in between any news release, any news, any numbers, any of that. You need to purchase a Bloomberg terminal in order to get access to live market information, not charts, information. It's not exactly as relevant as it used to be, but I will say there is still a delay. The best thing that you can use is live indicators. And one of the most live indicators that you have are your charts. Your charts, although someone could say it is slightly behind, we're talking negligible amounts. Don't worry about that. Yes, the tape, time and sales, that is your best bet. I do not watch the tape. I do not watch time and sales. I am a pure technical trader, and I base my decisions off of the chart. Okay, you're talking fractions of a second behind on those charts. Don't worry about it. News comes out, you're going to be able to see what's going on in the charts. React to it. You have a plan already in place. What I'm trying to get at here is when you are prepared throughout this entire list, when you're prepared, there's nothing that the market can throw at you to catch you off guard. And this is how I have found success. I may not be the smartest guy on the planet. I may not be the best person at math. It doesn't matter. A prepared individual is a successful individual. And that's what it boils down to. You don't need to be the smartest person out there. You just need to be the most prepared. If you are prepared, there's not a situation that could possibly pop up that can catch you off guard or damage you. Why? Because we've already developed our trade plans and we've already developed follow-up plans for if those trades fail. You see how preparation saves your ass? Well, start implementing that type of mentality into your trading and you'll have absolutely no choice but to win overall consistently. So I hope you enjoyed this 5 steps to becoming a successful trader during the pre-market session to help you prepare for the pre-market session. Now, if you like this video, make sure to follow, make sure to subscribe, make sure to share it out there. Let's get this information out there. And I'll check you on the next one, folks.